Hello, and welcome to the Accendo Traders Group. And as you just heard, the boys are back in town. We had to take a little time off to really get a lot of our back-end stuff. We strive to offer the best in service, the best in products, the best in security. So we had to take a couple weeks off from our free products. Still servicing our members, but our free products took a couple weeks off just to make sure that we can get everything to where we need to be to again to offer a nice professional solution for all our traders around the world. So here we are at the blog. You guys, most of you all know this blog.accendotraders.com. Initially, you're not going to see too many differences here. Obviously, if you want to subscribe to our blog, here you go. If you want to follow me on Twitter, we're giving out pivot points, targets, things like that. Follow me on Twitter. You just click on this button here, and you can follow us on Twitter. And then we have our free book on trading, and I'm going to click on this in a second. But the main thing I want to show you here are two things. We finally have our payment gateway all licensed up, so we're not going with PayPal anymore. We are now an approved vendor of Authorize.net, so you can be rest assured that your credit card payments are now even more secure than they were before. And so we definitely want to point that out. And of course, clicking on the featured product is where you can go to actually sign up to be a paid member. But let's go ahead and first make sure everybody knows that we do have a free ebook on trading the market. Basically explains how we at Accendo Traders trade the market. We are giving away this for free. This used to be a $99 product. We are now giving it away for free. And you can get there again by clicking on the link from the blog. The other thing I want to show you is that as a part of our celebrating our new payment gateway, also by clicking on that link, you can see that we are also giving away a free 2-week membership to our subscription service. So we are giving away a free 2-week trial membership to our subscription service, so you can sign up here. We have a couple of people, and this is again why we had to shut down for a couple of weeks here to get it all straightened out, but we have a couple people that will be getting an email today who already signed up for it, but you'll be getting your access information today. So those are some big changes about what we're doing to again offer you superior service. And there's one more thing I want to show you again as Accendo Traders tries to offer the best service to traders around the world. Okay, so here we are back at the blog.accendotraders.com, and we're going to scroll right down here. And like you said, our main product is a subscription service. Each night we put together a video trading plan that helps our members prepare for the next trading session. We give out targets, picks, all kinds of things that you guys get to see a sample of during our free products, but you don't get the full thing. So what we're doing again as a part of our game service celebration is that we are allowing people to sign up, and it is half off. Normally it is $99 a month, as you can see here. You see we have 4 different levels here, and normally the for a year it's $1,000 per year. You get off 2 months. Gold is for half a year. You get a 1-month discount. And normally, what many of our members do is they did a monthly subscription at $99 per month. We're doing a half off on this. So when you click on the Buy Now button and head on over to our secure shopping cart, you can see that for the next week we are doing a half off our products. So that will be for all the products. All of them are on sale right now for a half off. We've already given our current members their gift for being a member. So this is, again, we're just really happy that we finally got everything ready to go. And let's go ahead and get to our video. Okay, so we're working on our trading plan for March 15th. And those of you who've been with us for a while know the whole routine here. Because of time, we're going to kind of go quickly through that. Last week, hooray, 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 we posted the largest gain in months. The Dow was up 9%, the Nasdaq was up 10% for the week, and the S&P 500 was up 10% for the week. But the big thing was that financial stocks were up 34% for the week. And we all know that financial stocks right now are the largest percentage of the S&P 500. The S&P 500 is what we should be looking at because there's more stocks in there compared to the Dow 30. And so with financials up 34%, it's completely understandable why we had the week that we had. Now, what were some of the news headlines that came out that helped for this week? First and foremost was Representative Barney Frank came out and said that the SEC is going to reinstate the uptick rule. This is something that's supposed to help slow down shorting. Don't know if it really will, but the SEC is going to reinstate the uptick rule probably as early as next month. And then on Friday, although no announcement was made, the House also met to talk about the suspension of the mark-to-market. Again, no announcement has been made on that, but they're talking about that. And then we had positive commentary from several banks. Citigroup, early on the week, I believe Tuesday, said that they've earned a profit for the first 2 months. JP Morgan came out and said something similar. Citigroup also said they need no more government money. And even General Motors said they don't need the $2 billion. So there was some good news there. Whether or not you believe it, we'll see. And then we have better than expected retail sales data in the month of February. We were down 1% instead of being down, 0.1% instead of being down 0.5%, a half percent. So there was some news. Now, initial claims still stayed up there at unprecedented levels, up there in the 600,000 jobless claims for the week. So we're certainly not out of the water yet. As far as news coming this week, we do have some economic data coming out this week that could move the market. You can see we do have the FOMC on Wednesday, but again, we're already at lowest levels. Not really sure what they can do now to except for the language. If they put out some language about the market, if they say, the last several reports have said that things were worse than expected. If they come out and say now things are turning around, that will certainly move the market. So FOMC on Wednesday, if they put some good language out, that certainly will move the market. So on Monday, we got Empire Manufacturing, capacity utilization, industrial production. Nothing really huge, nothing big on the earnings side. We are at the end of the earnings, so we don't have that much going on. But we do have some financials. We got Goldman Sachs, Morgan Stanley this week, and FedEx this week, and Dry Shipping. I only put Palm on here because Palm has, quote unquote, has the iPhone beater or killer, and everybody has an iPhone killer. And there's our split. Okay, so we're going to start off by looking at the Dow-Jones. You can see we're sitting here at the 20-moving average, and we're going to talk about resistance with our sectors. But certainly after a week like this, we can see that a pullback probably is in line for right now. What I want to do is go ahead and switch this over to the yearly. This is what we talked about before, and you can see that this move this week brought us right back to our do or die line. So do we want to see more bounce? Yes. And we'll see the same thing on the S&P 500. Here you can see, again, the do or die line where we were going to fall off the cliff. Let's move over to the NASDAQ. And you can see that the NASDAQ is the strongest of them all, but we're still coming into resistance, even with the NASDAQ coming to resistance of the 50, while the Dow and the S&P 500 are at the 20-moving average. Quickly looking at our sectors, there's really no sector that really just blew me away. You know how much I like agriculture and MOS, but you can see the sector actually came down at the end of the week while the rest of the market was moving up. Energy doesn't look that great, but look how it's coming under resistance. Oil's coming under resistance. Look at metals coming under resistance, and that's really the theme. A lot of our sectors, even though they rallied well, and we're glad that they rallied well, but you can see that for the most part, they're coming into the resistance, 20-moving average. Some are coming into the 50-moving average. Not, you have some that you can be aggressive. Ooh, insurance here, let's get above the 20, run to the 50. Maybe look at real estate, maybe. But I'm going to look at it from the standpoint of we have a lot of sectors coming into a resistance level of the moving average, and that we need to be a little cautious. Obviously, we want to see whether or not this week's rally was true. So I'm going to be a little cautious on Monday, maybe day trade. Let me scalp a little bit and see where the market moves for Monday. no sector really blew me away as far as a you gotta buy, you gotta sell. I see a lot of sectors coming into resistance.